Hello everyone, here are the latest market news on January the 8th, 2021. Apple and Hyundai start early cooperation talks. South Korea's Hyundai Motor Co. said Friday that it is in early talks with Apple as local news reports said the firms are discussing trying out production of electric cars and batteries, sending Hyundai shares up 25%. The Korean media reported on these discussions earlier in the day and that Hyundai had completed internal discussions about the collaboration and was now awaiting approval from Chairman Eui-Sun Chung. Apple declined to comment. The announcement comes weeks after reports that Apple is moving forward with self-driving car technology with its own breakthrough battery technology as early as 2024. And Apple-branded car could be a big problem for electric vehicle market leader Tesla Inc. It remains unclear who would assemble such a car. However, analysts said they expect the company to rely on a manufacturing partner to assemble the vehicles. Global stocks soared to new highs on recovery hopes. Asian stocks hit record highs Friday and Japan's Nikkei hit a three-decade peak as investors looked beyond rising cases of coronavirus and political unrest in the U.S. to focus on hopes for a year-end economic recovery. Seoul's Kospi skyrocketed 4% higher, also at an all-time high. In Tokyo, the Nikkei added 2.36%, reaching its highest level since August 1990. European equity markets were expected to follow the Asian markets, with region-wide Eurostoxx 50 futures up 0.77%, German DAX futures up 0.83% and FTSE futures up 0.46%. The upbeat sentiment came after Wall Street hit record highs on Thursday, with the Dow Jones rising 0.69%, the S&P 500 adding 1.48%, and the Nasdaq Composite 2.56%. While bond prices fell as markets bet that the new Democratic-controlled U.S. government will increase spending and borrowing to support the nation's economic recovery despite Trump supporters storming the U.S. Capitol building. Oil near early highs as Saudi Arabia cuts output. Oil prices held near 11-month highs Friday and posted strong weekly gains as Saudi Arabia's promise to cut production continued to fuel market sentiment. The trader sentiment this week was supported by news of voluntary additional reduction of Saudi Arabia's production in February and March by an additional 1 million barrels per day, as well as data from the U.S. Department of Energy on the last week's decline of oil reserves in the country that exceeded analyst expectations by 8 million barrels. Brent crude rose 13 cents or 0.2% to $54.51 a barrel. It touched $54.90 on Thursday, its highest since February. U.S. West Texas Intermediate rose 14 cents or 0.3% to $50.97. The contract closed Thursday up 0.4%, hitting its highest since February at $51.28. MSCI and FTSE ditch Chinese firms as ban expands. Global index providers MSCI Inc. and FTSE Russell said they would cut the performance on three Chinese telecom companies, China Mobile, China Telecom, and China Unicom Hong Kong, in response to a U.S. investment ban by outgoing President Donald Trump, crushing stock prices by nearly $10 billion and increasing fallout from U.S. sanctions. However, as U.S. investors dump shares of blacklisted companies, bargain hunters in China are taking the opposite side of this trade, counting that a Joe Biden presidency will lift the ban on investment. For example, chip maker SMIC is one of the few that is attracting interest despite the ban, rising up more than 35% in 2 weeks. After all, the potential for expanding the scope of the rules made some investors nervous, especially after reports that the ban could be extended to tech giants Alibaba and Tencent.